Good afternoon, good evening, and good morning to all of you joining us from around the world for our brief, How to Target Profits in a Hostile Market. With the Dow, the S&P, the Russell, the NASDAQ, you name it, all of our markets near record highs and volatility near record lows. This is getting to be a potentially hostile trading environment. We're going to talk about how you can target those profits. Welcome aboard, ladies and gentlemen. My promise to you, by the end of this brief, I'm going to show you how the rest of 2019 can be your most profitable year ever, and how our Top Gun Options proprietary trading methodology and risk management process is going to help you profit in this hostile environment. It's new, it's effective, it's a simple trading strategy that will put you on the right side of your trades. And this is really cool, folks. You're going to learn a top secret tactic that we call a trade that's going to make money, but also serve as an overall portfolio hedge in case volatility spikes and the market rolls over. I'm also going to teach you what we call a burner trade, and you're not going to see that trade or the burner trade, this tactic, anywhere else other than here at Top Gun Options. So make sure you're paying attention here, folks, because at the end of the day, trading is a form of combat. There's a winner and there's a loser, and at Top Gun Options, I'm going to put you on the right side of that trade. So, folks, attention to brief. No distractions. Silence that electronic nicotine. Grab a pen and a piece of paper because you're going to want to take notes, and make sure you stay to the end so you can grab 2 free bonuses on me just for listening to our brief. Now, why should you listen to me, folks? Well, Top Gun Options has been around for nearly 10 years, and we've seen about $4 million in notional profit during that time. That's an 80% average annualized return in all market conditions. Whether the market was going up, down, or even chopping around sideways, 80% average annualized return with limited drawdowns. Why should you also listen to me? Love or hate the guy, we predicted that not only was he going to win, but the market was going to rally. Does everybody remember what the smart money was saying? All the Wall Street blue blood banks, Trump's going to lose, and if he wins, the market and the economy's going to implode. Absolutely wrong. The Trump rally that we predicted saw the S&P 500 up 22%, while our average portfolio was up 110% on risk. We also predicted during that time that the chickens were going to come home to roost, that the FANGs, the Facebook, the Apples, the Netflix, the Googles, we're going to turn on the lights in the kitchen, and we're going to see a lot of roaches running around in those FANGs. And they absolutely imploded after that Cambridge Analytica scandal, the iPhones being intentionally slowed down by Apple, Google manipulating search results, you name it. We predicted it, and those FANGs started to implode. As we bailed out of those FANGs, guess what we targeted our firepower into? What we call the Death Star, Amazon. Amazon is up 110% since we bailed out and actually started pounding or shorting those FANGs into the dirt. We got long Amazon and up over $55,000 actually in profit year to date. Absolutely awesome. A lot of great predictions that we made that was against the Wall Street smart money, right? Wall Street ain't so smart, as you're going to see in a little bit. And I have a flash intelligence report that just came in that I have to brief you on right now. Ladies and gentlemen, no one cares more about your money than you. Period. I bump into people all the time. My brother-in-law manages it, or a buddy from college, or folks, nobody, I don't care who they are, cares more about your money than you. And the riskier the markets are becoming, the more important it is for you to actively manage your portfolio and manage your risk. Welcome aboard, ladies and gentlemen. My name is Matthew Buckley. My call sign is Wiz. I earned that call sign flying the FA-18 Hornet for the United States Navy for about 15 years. I graduated from the Navy Fighter Weapons School, which many of you know affectionately as Top Gun, and I was also an adversary pilot. So if you did see the movie Top Gun, you saw Jester and the other senior pilots flying around in jets that were painted like Soviet MiGs, and we also flew bad guy tactics. So that was my job when I went to Top Gun. Had an absolute blast serving our country. Flew in a bad guy jet over Pakistan. Got the opportunity to fly with the Blue Angels, and was also an LSO, a landing signal officer. So when I wasn't flying, I'd be on the back of the ship day, night, bad weather, trying to help my fellow aviators get aboard the ship. And also flew 44 combat sorties over southern Iraq. That's a picture leaving the Iraq is right on the left right here, flying over Kuwait City down there, heading home to the USS Kitty Hawk in the middle of the northern Arabian Gulf. So when I left active duty, I started applying everything I learned in the military and applied it to the business world and became an executive consultant to Fortune 500 companies. Actually wrote a book called From Sea Level to Sea Level, documenting my experiences, and I accelerated the performance of companies from China to Argentina to Canada to the UK to here in the United States, and also became an internationally acclaimed keynote speaker. Well, how did Top Gun Options come about? I was born a middle, lower class Irish Catholic kid, one of 6 kids in South Jersey there. And my parents always instilled the idea of service above self, right? And I was also a beach guy, loved flying, wanted to serve my country, kind of a Reese's peanut butter cup naval aviator, wanted to be a Navy fighter pilot. But as I was growing up, my dad would be sitting there in his coat and tie before he went to work, when I was eating breakfast, getting ready to go to school. And on the back of the newspaper would be kind of all these hieroglyphics, and my dad explained to me that those were stocks, and explained the whole concept that, hey, Matthew, if you go to McDonald's today and you buy that Happy Meal, if you own shares in the company, it could go up. That always intrigued me, that concept. And by the way, folks, you don't join the United States Navy to get rich. You join the Navy to serve your country and your fellow Americans. So I was always interested in investing, and when I was fortunate enough to be selected for jet training, and then in jet training, fortunate enough to get selected, handpicked to fly the FA-18 Hornet, I started to invest. Folks, this was before Al Gore invented the internet. I actually had to pick up the phone. I was investing, I was trading through USAA. The other day, I found some of my old trade receipts, like carbon copy receipts I'd get in the mail weeks after placing a trade. But here's what I did. I started applying everything I was learning as a fighter pilot. Having a strategy, implementing tactics, knowing when to get out of a good or bad situation before it got worse, not making emotional decisions, contingency planning, asking, hey, what could go wrong during this mission or during this trade that I could talk about right now before I even get airborne? Eventually, my returns were so good that I popped up on one of the largest volatility arbitrage options trading firms in the world and became their managing director of strategy. Well, how did Top Gun Options come about? Quick little detour, because of a tragedy. Early on the morning of September 11th, I was packing for my first flight, for my first trip as a first officer at American Airlines. My wife came into the bedroom and said, hey, you better come out and take a look at the TV. It looks like some guy hit the World Trade Center with an airplane. I'm like, whatever. Bad weather, small airplane, I got to pack. She said, no, you better come take a look. The look on her face said it all. Went out in the living room. Beautiful day in New York City. Big smoking hole, fire. And as I'm going through my mental aviation checklist about how something like that could have possibly happened, the next plane hit. Immediately, folks, I knew we were under attack. I raced into the bedroom, just slid out of the way, my American Airlines uniform still hanging in its plastic, still actually sitting in my spare bedroom back there with the plastic on it. Put on my flight suit, that familiar green flight suit, threw on my boots, didn't even tie it, tripped into my old 1989. I had a 911 Porsche, and I think I broke the land speed record getting out to Naval Air Station Fort Worth. Once I got off active duty to be a rich airline pilot, right, working one day a month and flying to exotic places, I got hired by a F-18 Reserve Squadron flying out of Naval Air Station Fort Worth. That was the dream job, folks, being an airline pilot and then flying fighters part-time in the reserves. Well, guess what? It was like Lexington and Concord, folks. I was a Minuteman. This was the day where I knew I had to execute. Another squadron mate of mine made it on board the air station, and he and I told our maintenance control to get the aircraft combat ready. We ran next door to the TANG, the Texas Air National Guard. Those guys, 4 of their pilots made it on board before they closed the air station and went to a combat posture. So we ran over there because they were tied into NORAD, the North American Air Defense, and we were briefing to fly combat air patrol over the United States of America. Last time I had flown combat air patrol was over Iraq. Absolutely incredible, folks. As we were briefing to get airborne to fly combat air patrol over the Southwest United States, the Pentagon got hit. So imagine being ordered going from potentially flying in an airliner that day to being ordered to shoot one down, to maybe even shooting down one of your squadron mates. Most of the guys in my reserve squadron were airborne that day because they were also pilots for the airlines. Absolutely surreal, folks. A couple days later, I actually launched and put a guy into a grass strip down outside of Waco because he was flying near the president's prohibited airspace outside of Waco. Man, in the blink of an eye, since I was obviously one of the most junior pilots at American Airlines, since it was going to be my first flight that day, a couple weeks later, I got a photocopied letter from American Airlines HR in the mail that said, "Dear crew member, you're furloughed," which is a polite airline term for you're laid off. In the blink of an eye, I lost my health care, I lost my job, I lost my pension, I lost everything. What little savings my wife and I had from being in the Navy, we used to buy our first home since we lived in base housing. Had an 8-month-old son. Time to get serious, man. Get up, brush yourself off, man. There was 3,000 other people who had a hell of a lot worse than me and their families. So stop feeling sorry for yourself. Time to get airborne. Let's go. Fortunately, my reserve squadron got mobilized actually for Operation Iraqi Freedom, so I could be what we called a reserve bum. I could go in and fly a lot and actually feed my family. But here's what I started to do, folks. I started to get serious with my trading. It had been a hobby up until this point. I loved making money on the side, kind of doing what I did in the fighter jet to my trading. Well, now I did it for real. Now I had to help my family survive. So my returns, by applying everything I learned flying a fighter aircraft, the discipline, the risk management, having superior execution, I applied to my trading with stupendous results. I eventually popped up on the radar of one of the largest equity options trading firms on the face of the earth, headquartered right there in the Chicago Board of Trade. You see those big windows there? That was our trading floor. Intersection of Jackson and LaSalle. That's the options trading center of the universe. And they brought me on board. I had an absolute blast when I was there. I helped build a hedge fund. I helped build a retail brokerage called Options House. I was their managing director of strategy for this multi-billion-dollar options firm. And guess what I also did when I was up there? I helped build a media company. I was the founder and CEO of the Options News Network, ONN.TV. We were kind of the CNBC for options, and I hosted 3-4 of the shows. Absolute blast. Now, quick question. Anybody here from Chicago? Let me show hands. No offense, I love Chicago, but you can keep it. And I got to be honest with you, I felt like Eddie Murphy in Trading Places. Everybody remember Valentine? Little old him going up and essentially running this multi-billion-dollar firm with Duke and Duke. I felt like that. But folks, the more I hung out up there, the Wall Street smart money, so to speak, they put their pants or their dress on the same way we do, pulling back the curtain to see the great and wonderful Oz. Those were folks just like me. I brought those methodologies from flying a fighter aircraft and brought them to this trading firm and had an absolute blast and incredible results. So essentially going from an amateur to a professional. Little old me. But like I said, and okay, so a couple of you are from Chicago. No offense, folks, but for 9 months out of the year, it's absolute misery. Walking from Union Station to the Board of Trade in February was a survival situation. You're like stepping over dead bodies and stealing scarves to make it into work. I lived out in Naperville, which is a suburb out to the west, Napertucky, and I loved it, loved the people, loved the food, the wine, the steaks, but I'm a beach guy, man. No offense, I need an ocean, a beach, and Lake Michigan just didn't cut it. So I took my young squadron at the time, which had grown, and we decided to move where my wife is from down to God's Waiting Room down here in Boca Raton, Florida, where we started Top Gun Options about 10 years ago. We're getting very, very close to our 10-year anniversary. Literally training probably over tens of thousands of folks of all skill levels. Okay, so that's a little bit about me, my background, and the background of Top Gun Options. So let's get airborne here, folks. $60 million F-18 Hornet sitting on the flight deck of an aircraft carrier is what? It's an inanimate object. It can do nothing. It just absolutely does nothing sitting there. But guess what? In the hands of a trained naval aviator, a steely-eyed fighter pilot, it is an absolutely lethal platform. So I spent 15 years in a constantly changing, challenging, and oftentimes hostile environment. Sound familiar? What's trading, folks? What are the markets like on a daily basis? Are they constantly changing? You bet. Are they challenging? Hell yeah. Are they hostile? Absolutely. One of the guys, one of the heavies up in Chicago called retail traders such as yourself cordwood. Retail traders, they're liquidity for us, Wiz. Come on. Chuckle, chuckle. It ain't funny, folks. One of my main ethos as a human being is you put the ladder down. In the military, we were taught if you make it higher in rank or you go to Top Gun or something like that, you don't keep the knowledge to yourself. You put the ladder down and you grab your buddy's arm and you pull him up. That's one of the reasons I started Top Gun Options as well. This mentality on Wall Street of I got mine and they pull the ladder up. That ain't me. That's not Top Gun Options. So I'm going to show you my trading cockpit right now, how I've successfully applied everything from a fighter pilot to a trader with incredible results. And I got to be honest with you folks, I'm a knuckle-dragging political science major fighter pilot. If I can do this, you can do it. It ain't rocket surgery. Anybody can do this. So now we're going to get into the meat of how you can target profits in a hostile environment. All right, folks, here we go. Now it's time to identify how we target profits in a hostile environment. Just in case you couldn't tell up until this point, folks, not the sharpest tool in the shed, man. Political science major, knuckle dragging, Navy fighter pilot from South Jersey. I use a lot of acronyms, right? Because combat and trading can be complex. How do you battle complexity with simplicity? So you ready for this? Grab your pen and paper because here's how we target profits in a hostile market. You ready? FMT. We find the entry, we manage our risk, and we target for maximum profit. FMT. So let's start with step one. How do we find the entry to our winning trades? This is our methodology, folks. Another acronym to write down. SOT. Every live trade brief you're going to get access to, we're going to do a strategic, operational, and then tactical brief. This is the way we break up our live trading sessions. The hundreds of folks in this room, I can guarantee you, you're the average retail trader. What does that mean? Folks, you don't even know what you're doing for lunch tomorrow, let alone what positions or what trades to have on out a year or two from now. You're a very, very tactical trader. Wake up in the morning, put your bunny slippers on, maybe throw on Fox Business or CNBC and try and figure out what to trade. Absolutely not. That's going to set you up for failure. For the first 10, 15 minutes of every brief, I'm going to treat you like an admiral or a general, and I'm giving you your daily briefing. What's going on economically, politically, and militarily around the world. Global economic events, folks. I'd say, 2-3 years ago, everybody woke up, and not everybody, not the folks at TGO, we made about $35,000 off of this event. Does everybody remember the Greek debt crisis? Everybody remember when they were going to leave the EU and default on their debt? No, we're going to keep them in. No, we're not going to do those austerity efforts. Yes, we are. We made about $35,000 trading weekly options around that Greek debt crisis. What about politically? Everybody remember the Brexit? We made 44. You ready for this, folks? I was wrong on the Brexit. I thought they were going to stay in the EU. I got it wrong, and we made $44,000 trading. You ready for this? Volatility. As the vote was coming up, what happened? We got long volatility because there was a lot of uncertainty. As soon as the vote happened, even though it was a vote to leave, volatility went down. Volatility, it's called a vol crush. Volatility imploded. We made 22 grand on bullish double verticals on the way up and the same amount on the way down, even though we got it wrong. How about militarily? Year and a half, whenever it was, we woke up and Vladimir Putin had invaded Crimea and then moved on eastern Ukraine and shot down a civilian airliner. Move the markets. You have got to know these things because if you're just sitting there looking at your Tesla trade and all of a sudden that thing's imploding because of one of these global events, you have to know about them. These are part of our strategic 10, 15-minute part of our briefs. Then we peel back the onion, so to speak, and we get operational, right? What's going on here in the United States domestically, economically, politically? Economically, what about the Fed, folks? The Fed's dead. The president has been pounding them to cut rates and maybe do some quantitative easing. What about politics, impeachment, government shutdowns? All of these things move the markets, and I'll brief you on that for about 10 to 15 minutes. And then, and only then, do we get tactical and trade. This is the methodology, folks. Win the war on terrorism, hold this town for the next 4 hours. Tactical, you guard this bridge. SOT, strategic, operational, tactical. And we have trades in our portfolios that match these. Strategically, we go out a couple years and do long call diagonals and synthetic stock. Operationally, we trade the front month with vertical spreads and iron condors, and we hedge. We have an ejection seat in case something goes wrong in this market. And then tactically, very tactical trading, we trade weekly options every Monday at 1 o'clock, which I'll tell you here about in a little bit. So let me give you an example with an actual trade. We're going to find the entry. So FMT, find, manage, trade. Under the find the entry step, we have to look at the fundamentals. What's going on in a stock or in an ETF or in an index, right? We take a look at the fundamentals. And as an options trader, I'm going to teach you how to take a look at volatility. And finally, technical analysis. So let's use a live example on one of our core holdings in our model portfolios, a rail CSX. Now, this is a Warren Buffett. This is a rail. This is a great solid transport that had earnings recently and blew the doors off of their earnings. I like one of the wisisms, so to speak, you're going to hear about is financials and transports tend to lead the economy in and out of bad, right? If financials and transports are rolling over, people ain't getting loans, people ain't shipping or moving stuff, both bad. I call them canaries in the coal mine, right? So CSX is a great rail. The success story continues. These guys have been printing money, and the stock just seems to be going up and to the right, okay? So let's take a look at a chart of CSX. So as you can see right here, ladies and gentlemen, grab my little laser pointer here. So here's earnings, and this stock had what we call a gap up on earnings. The stock gapped up on earnings, which is very, very bullish. Now, let me grab a line drawer here. Let me grab a pen. So gap up. Here's about half the gap. Let me just do some rough drawing there. There's three scenarios with a stock that has a gap move, either up or down. In the first case, the stock can gap up and then kind of head back to half the gap. If it does and then holds it, it is very, very bullish. That is a great bullish indicator. If a stock gaps up, comes back to half the gap, and goes through it, extremely bearish, pound it into the dirt. And in this case with CSX, it gapped up, didn't even fill half the gap. See, it's still up here. That's uber bullish. Okay, so this stock didn't even fill the gap at all, and it's heading higher. So here's what we're going to do. So finding the entry, we're bullish on CSX, but we have to, the first thing we shouldn't be looking about or thinking about is all profit and let's make some money. We need to talk about managing risk. So let me ask you a question. That's a Canadian F-18 Hornet right there, a CF-18. He was practicing for an air show. He was at low altitude, demonstrating the low altitude, low airspeed capability in the F-18 Hornet up in Canada. As he got towards the end of the runway, he was up in an airfield. The engine, one of the engines quit, and the guy immediately rolled over. In the blink of an eye, you can Google Canadian F-18 crash. Watch the film clip of this. In the blink of the eye, the guy is out of that aircraft, right? Let me ask you a question. When did this pilot make the decision to pull the ejection handle and get out of that airplane? Let me see some of your responses. When the engine failed, immediately. Okay, who else? When did this pilot of this stricken F-18 at 200 feet, if you watch the video in the blink of an eye, man, this guy's out of the plane, and then the plane is where? Impacting the run. There's him right there. That's him all the way up there. There's the ejection seat over there. So, okay, some of you have the right answer. This Canadian F-18 pilot made the decision to eject out of this aircraft, you ready for this? Before he got in the airplane. In a brief. Ladies and gentlemen, why do you think our trading services here at Top Gun Options are called live trade briefs? First of all, they're not called longs, right? A live trade long, they're called briefs for a reason. He knew to get out because it was his procedure. He sat in the brief and said, okay, when I'm doing this maneuver, if this happens, I'm going to do this. If I'm doing this maneuver, this happens, I'm going to do this. He knew before he ever got in the airplane what he was going to do if something went wrong. Those procedures are laid out in something we call an SOP, Standard operating procedure. And we have a lot of SOPs here at Top Gun Options that I'm going to teach you. Standard operating procedure. Unfortunately, we say that those SOPs are written in blood. Why is that? Because somebody screwed up some point, or something happened in the aircraft that didn't happen before, and we have to make it a procedure. So who needs to manage risk? You. You are the pilot in command of your portfolio, the PIC, pilot in command of your portfolio. So we're going to have risk management procedures. So in your trading, the first thing you need to ask yourself is not, how much am I going to make in this trade? The first question you have to ask yourself is what? How much can I lose in this trade? What is my max loss? Folks, the first rule of investing, you ready for this, is don't lose money. Now, some of you might be sitting there like, my first rule is to make money. You're wrong. If that's your mindset, you're going to ride that jet into the runway and into that fireball, to be brutally honest. The first question a fighter pilot and options trader asks is, how much can I lose? What's the second rule? See the first rule. We want to make money, and we want to make money consistently, and you can only do that by managing risk. So in this trade I'm about to look at with CSX that we were talking about, it's going to be what we call a credit spread. More to the point, the tactic's going to be a bull put spread. I'm bullish on CSX. I'm going out about a month, and it's a spread. So on a credit spread like this, I don't want to risk more than about 5 to 10% of my portfolio. $100,000 model portfolio, about $5,000 in risk. $50,000 portfolio, $5,000 in risk. You have to come up with your own SOP. You have to know in each individual trade, what is my max risk? And we want to take a look at maybe doing a high probability trade using at the money volatility, right? We talked about looking at fundamentals, volatility, and technical analysis. We looked at some of the fundamentals. I've looked at the volatility. And now you look at the technical analysis. As we talked about, very, very bullish. Gap up. There's half the gap. It didn't even come back and touch it at all. Maybe a little within a hair's breadth here, but no, this is a bullish chart on CSX. I absolutely love what we're looking at here with CSX. I think it's heading higher. So, as I said earlier, I was going to introduce to you what is called a burner trade. So with CSX, I'm bullish. I don't think CSX is going to go below a certain point, right around the 78-ish line here, okay? So if you don't think something's going to go down, you can do a tactic which is called a bull put spread. So right around that 78 level, I'm going to look to sell 75 of next month's 78 strikes. The current month, expiration month, is May 20. I'm going to go out to about May 24th. Me selling these puts at 78, the 78 strike means I don't believe by this expiration CSX is going to be below 78. Okay? What if you're wrong, Wiz? Well, I'm not going to sell these puts what are called naked. I'm going to hedge and have on, I'm going to buy these downside puts. I'm going to buy 75 of the May 24th, 77 and a half puts. So I'm bullish on CSX. I'm using puts, and it's a spread. This tactic is called a bull put spread. But many of you who are familiar with options also know it as a credit spread. We are getting paid to do this trade. We are bringing in a credit of 17 cents. For all the political science majors out there, I'll do the math for you. 75 times 17. You're getting paid to do this trade nearly $1,300. Now, as soon as I click to go to the analysis on here, I want everybody to look at one thing and one thing only. You ready? Max potential loss. Boom, right there. Our max potential loss in this trade is $2,500. Okay? Using at the money volatility in these options, there's a 34% probability of getting fully kicked in the teeth. But we're not going to get fully kicked in the teeth. Why? Because we will identify our eject point. Okay, we'll talk about that in a little bit. Now that I'm the pilot in command and I say, Wiz, I acknowledge that risk. I'm the pilot in command of my portfolio. I acknowledge this. Now we can look up here at Mr. Happy and say max potential profit. Now we know the max potential profit in this trade is $1,300. Here's what's really, really, really cool about a spread like this. On a spread like this, you make money 3 out of 4 ways. The stock could do 3 out of 4 things. You only make money if it does one thing. You ready? You make money. So here's the blue line. You see this blue line right here? That is the current stock price of CSX. that blue line right there, CSX can go up, right? We think it's going to go up. We're bullish on it. It can go up. We make money. Awesome. Well, folks, CSX can keep doing what it's doing and just kind of hover around and stay right around here. We make money. And check this out. CSX can even go down a little bit, folks, as long as it stays above our break even here of 77.83. The only way this trade loses money if CSX decides to implode and go down. But like I said in our brief, we're going to look to eject and get out of this trade if it goes up in value. And a good rule of thumb that I use for credit spreads is I double the credit that I take in. If we get filled in this trade at 16, 17 cents, I'll look to get out at around 32 to 34 cents, right? That's the time one of our engines slammed out in this trade and we need to pull the handle and get out. We're not going to ride this thing into a max potential loss. But if you think CSX is really going to go up, okay, Wiz, I get it. This is a bull put spread. I'm going to learn. You're going to train me how to do bull put spreads. But what else can you do, right? You could, well, let me go back and just kind of ask a question. If you think something's going to go up and you just have basic knowledge of options, what could you do? Yeah, exactly. You could buy some calls. You could just, you know what, Wiz, you're right. I think CSX is going to go up. So check out this trade. It's called a burner trade. Here's the bull put spread. Remember, we were taking in a credit to do that? Guess what I did with some of that credit? I'm going to buy some calls, right? I'm going to buy some calls. Why do I call it a burner trade? Let's take a look at first of all, as soon as I clicked on this, everybody, since I just trained you how to do this, you looked at the max potential loss. I told you my SOP is not to risk more than about $5,000 on any one trade. As a pilot in command, I say, all right, 5450 is around my SOP. I'm good to go. But take a look at this. This P&L graph literally looks like the takeoff in an F-18 Hornet. Get to the end of the runway, plug in the afterburner, and there we go, off to the sky. So this is the burner right here, down here, folks. This is the bull put spread, and then our upside calls we bought. The potential profit in those is unlimited. So this trade is called a burner trade. We put on a bull put spread, and we took in that credit, and we bought some upside calls in case CSX decides to get on a train, so to speak, and get airborne. Well, that'd be interesting to see a CSX train getting airborne. I don't think that would be a good thing, though. Everybody, yeah, it is. That is a cool tactic, isn't it? Yeah, let me go back one slide. This is the bull put spread. We bring in a credit, and what do? We take that credit, and we go out, and we buy some upside calls, right? You could just do this, right, folks? Hey, Wiz, yeah, I agree. CSX, great earnings, good forward guidance. I think the stock's going up. Good looking chart. I'm going to buy some calls. Why? If you think something's going up, you obviously believe what? It ain't going to go down. So do both. I'm cheap, man. Have somebody else help finance the purchase of those calls. Isn't that cool? And that, look at that. It literally is me flying down the runway in my F-18, get to the fence at the end of the runway, straight up vertical climb. That is what we call a burner trade, using a bull put spread to buy some upside calls. Okay? Now, FMT. We found the entry. We are managing our risk right here. What else do we need to do? We need to target, that's the T, FMT, target for max profit. Or exit, get out of the trade, eject for minimum loss. Ladies and gentlemen, I never dropped a bomb in anger or fired a real trade with capital and closed my eyes and said, man, I hope that bomb hits bad people, or I hope this trade makes money. Hope ain't a strategy. Right? Before we squeeze the trigger on any trade, we're going to know when we get out of something for max profit or min loss. That's the discipline up here, folks. It's written down. In your trade journal, it says, I'm going to get out at this profit or this loss. That's the discipline you need to have, right? Now, let's talk about our bear call spread SOP for a credit spread, right? Our bear call spread SOP says, I'm going to take profit if I'm seeing 70, 80, or 90% of the credit that I took in, right? If I take in about a credit or what was on the screen, I'm going to get out when I see a 70, 80, or 90%, right? No one has gone broke taking a profit, ladies and gentlemen. And where are we going to eject? I told you I like to eject at twice the profit that we took in to avoid that max potential loss. Warning, do not turn a 70, 80, 90% winning trade into a 100% loss. Anybody in here do that? Right? What do I like to say? Pigs get slaughtered, folks. How many of you have been in a credit spread that's been making some money? There's a couple $100 left, and it's got like a week to go, and you sit there and go, well, there's a couple $100 left. I want that couple $100, and something horrific or good news happens, and it blows out that trade. So you went from a 70, 80, or 90% winning trade to 100. You don't have to. I know it's happened, folks. It's happened to me. That's why we don't do that anymore, and we do what's that guy's name? Stephen Miller. We go on, take the money, and run. You have got to take the money and run when you got it. No one's gone broke taking a profit. Okay, so eject it to double. Remember, with a credit spread, folks, whatever credit you bring in, you want to keep that. If it starts going in the other direction, money starts flying out of your pocket, that's when you need to put in that eject point and go, okay, done. It's time to get out of this jet and give it back to the taxpayers and live to fight another day. Do not ride your trades into the ground like that CF-18. Be him and be flying again in a couple weeks like he was, okay? That is called a burner trade. Now, here's our second huge takeaway from this brief is what? A tredge. You're going to learn a new word, a new tactic today. It's called a tredge. With a trade, ladies and gentlemen, what do you want to do with a trade? You want to make money. Okay? With any trade, you want to make money. Guess what you want to happen with a hedge? You want to lose money. Okay, never thought I'd go to one of these briefs and have the guy said, hey, I want to lose money. I want to lose money in this, folks, a hedge, right? If all my bullish trades are making money, everything's green on my screen, I should have a red position, and that's my bilge pump, folks, my ejection seat. If I wake up one day and all my longs are red because we're having a pullback or something like that, this is the one that's going to be green. So this is your ejection seat. Hedges are like ejection seats. I never got back from a mission over Iraq, climbing out of the cockpit and looked at that ejection seat and said, what a waste. That was stupid to have that on. I didn't even use it. I would have rather had the other 800 pounds of gas. No, folks, absolutely not. I never went flying in the F-18 before getting airborne and had the chief tell me, hey, Lieutenant, mind if you still use this jet because, the ejection seat ain't working. No, folks. So a tredge is a trade that I think is going to make money, but is also going to serve as a hedge in case the market pulls back or volatility explodes. It's a trade and a hedge. We call it at Top Gun Options a tredge. Now, I said earlier I used the term whizzism. Here's another whizzism. When volatility is cheap, you buy it. When volatility is cheap, you buy it. When it's expensive, what do? You sell it. When something's cheap, you buy it. When it's expensive, you sell it. Volatility right now, ladies and gentlemen, let's take a look at the VIX, the fear gauge that everybody likes to call it. Look at the VIX, ladies and gentlemen. It is plumbing around 12. The last time volatility got this low for this long was back when? January and February of, 18? Remember when all the quote-unquote smart money was shorting volatility, betting that it wasn't going to go up? They got obliterated, folks. The VIX from like 12 to 36 in the span of a week wiped out nearly $2 trillion in folks that were short volatility. So right now, ladies and gentlemen, with the VIX down here, it's resting heart rate. The average VIX since it came about in 1994 is a 20. We're down here in the 12s. Something is going to happen in the next, call it 30 days, to freak this market. It's just going to happen. Something's going to happen to freak this market out. What? I don't know. That's what we're going to talk about in our live trade briefs. Is it Iran? Is it North Korea? Is it the clown car in Europe with the Brexit? And I'm hearing Italy might have a debt crisis. Is it here in America? Does the market wake up one day and realize that the Fed just doesn't have the power to keep this market high, and we're getting a hangover from our hopium? So remember, folks, that everybody who was short volatility a year and a half ago got wiped out. So it is smart right now, with volatility being cheap, you want to buy it. And the vehicle that I like to trade is the VXXB. It's the Barclays ETF that tracks volatility. And look at that. Kind of looks like the VIX, doesn't it? A couple times in the previous months that we've seen a freak out, but now we're just there. Nothing's going on, Wiz. There's absolutely nothing that could go wrong in the next, call it 30 days. Wrong, folks. That's wrong. I'm down here in South Florida. You know when you buy hurricane insurance? When it ain't hurricane season and there ain't no tropical depressions or hurricanes inbound, then it's too late. You want to buy it now and it's sunny and the weather's great. Volatility is cheap, folks. So looking at a chart of VXX, I don't think, can volatility go lower? Yeah. Here's another wizardism. The market can remain irrational longer than you can stay solvent, right? Well, guess what? I think something's going to happen soon to cause volatility to freak out, right? We can go from absolute calmness to the VIX can be up 10, 15, 20, 30% in the blink of an eye in a tweet, in a breaking news story. So if you don't think something's going to keep going down, what could you do? Well, like we just looked at with CSX, we could do a bull put spread. Now, it sounds like master of the obvious because this trade, this trudge, if you don't think something's going to go down, what can you do? That bull put spread, right? But let me go back real quick. If you don't think something's going down, what do you also think it might do? Go up. Kind of like that burner trade. This trudge, let's take a look at a bull put spread on VXX. How about 150 of the May 24th, 25 puts? Selling those, that's me saying, Vol, I think you're way too cheap down here and something's going to happen in the next however many up until expiration. And if I'm wrong, I'm going to buy those downside puts, just like we did in CSX. Bull put spread, credit spread, taking in about 26 cents to do this right now. Risking, look at that. Well, bringing in $3,900. First, let's take a look at our risk, right? Our max potential loss. Well, actually, you know what? I'm going to build the whole trade first. So, bull put spread. You don't think something's going to go down? Let's look at a bull put spread, right? Now let me ask my master the obvious question. All right, Wiz, you don't think VXX is going to go any lower, and you think it's going to go higher? What can we do? Let's buy a bull call spread. Let's buy, and this would obviously be a debit spread. So the other trade we were bringing in about 36. This one we're spending about 23. Net, you're making money. You're getting a credit to do this trade. But look at this. Let's look at buying the 26 calls and selling the 26.5. So unlike the burner trade, this kind of puts a cap on it. Because why would I put a cap on this? Because when volatility spikes, whatever caused the freak out ends, right? Well, hopefully, unless it's something just horrific. So you'll look at the VIX and it's like a heart rate monitor. Freak out, okay, that thing's over with. Oh, another freak out. So this, I want to actually put a cap on it. So I'm going to buy this bull call spread, buying the 26 calls, selling the 26.5. This is a debit spread. The other one's a credit spread where we bring in money. This one's a debit spread where we spend money. But check this out. Let's look at what the resulting trade looks like. If something ain't going down and you think it's going to go up, here is the entire trade, right? This was the bull put spread we looked at a little while ago. What did I put on top of it? A bull call spread. Some people call this a double vertical. Matter of fact, in this case, we're bullish on volatility, so this would be called a bullish double vertical. I call it a trade, a trudge. Why? Because I think this is going to make money. I think something's going to happen to make vol pop in the next 30 days. How do you know, Wiz? Well, my call sign's Wiz. It's not Nostradamus. I can't predict this. This is just smart to do, though, because like the second half of the word says, if the market rolls over or volatility has a rip your face off spike on some event, this is going to make money. And it serves as a hedge against your long positions getting kicked in the teeth. But this should be the biggest, coolest thing that puts a smile on your face. You are bringing in a credit with this trade potentially of nearly $1,700. Let's take a look at the overall metrics. Look at this. Right around my SOP, not wanting to risk more than, 55 grand. This is a little north of that. But look at the max potential profit. If volatility spikes between now and when this trade expires, this trade could make about over $9,000. I told you with the Brexit and some other uncertain events that I even got wrong, this is how I can see those type of profits. $44,000 around the Brexit that I got wrong. We made about 22 on a bullish double vertical as vol went up going into the vote. And then when the vote happened, volatility imploded and we made about the same. So look at the picture here, folks. Here's your bull put spread. Here's your bull call spread. This is simply two bullish trades on top of each other with the same strategic mindset. Bull put, bull call. This, ladies and gentlemen, is what we call a trudge. So here's what's cool. Essentially, somebody just walked into your kitchen. Hopefully you know them. Well, somebody just sat down at your kitchen table and said, you know what, I'm going to pay for your auto, home, and life insurance for the next month. I'm going to pay you to be long on volatility, to have a hedge on. Isn't this awesome? This is absolutely incredible trade. It is a trade that acts like a hedge. Max potential profit of over $9,000 if volatility spikes in the next 30 days. You're getting paid to do this trade. Somebody, the market, is paying you to be long volatility for the next 30 days. It is a smart thing to do, ladies and gentlemen. It is smart to have a trade on that serves as a hedge in this potentially volatile market. A trade that makes money and serves as a hedge is a great way to potentially profit in a hostile market. All right, ladies and gentlemen, now it is time to get airborne. Now, at the beginning of the brief, I asked you to listen to a couple of the reasons why you should listen to me. Now do me a favor and listen to what some of our current TGO members have to say. Arnie, thanks, Wiz. These are always a great review for me. He's talking about our live trade briefs. Trading a small account, I'm up over 75% in the past 3 months following your insights and tactics. Very happy. JG, John Gardner, I would like to thank you, Wiz. Thanks to TGO and your mentoring. I've netted over 15K this month. Thanks for all you do and your teachings. Ron, Wiz, thanks for the 37 grand so far this year. Scotty, Wiz, only been a member for 2 weeks, and I'm up $8,170 in closed trades, Facebook, SPX, and Amazon following those trades. Chuck, Wiz, I used your intelligence and made $9,500. That's $9,500 in 1 day, shorting NDX and SPX options. Hell yes. I'll give you a hell yes with that too. Dennis, all the S&P and Apple trades from last week, plus Facebook in accelerated retirement. This is funny. Last Wednesday, I was calling you crazy, but after the market closed on Friday and banking over $6,000, I'm now calling you a genius. It's kind of my naval career. I've gone from crazy to being a genius. It's a wide swing, but it's doable. Ron, I want you to listen to Ron here, folks. Been trading with you since June of 2011. Started with a $6,000 account. Traded small. Now account value is $175,000 and able to do larger trades, folks. You see that? Went from $6,000 to $175,000. Absolutely awesome. Could not be happier with what he's doing there. Dennis, over $6,000. Folks, I could go on. Greg Thomas opened my Jan 21 long call diagonal on Amazon on March 8th when the 80 deltas were on sale for $2,200. I am up nearly 31%, almost $15,000, folks, in our Amazon in 8 trading days. Nice going, Greg. That is awesome. Our 2018 performance, folks, was our best return since we got airborne around 2010, and I'm embarrassed to say our worst portfolio, right? Embarrassed. 101% return on risk, folks. And our 2019 track record, it looks like we're going to even beat our record performance from 2018. Take a look at how the smart money's doing, folks. This is comical. Take a look at this. Look at the past 5 years. Scratch, 6%, 10%, -5%, almost about 5% return. Don't think that you should be in some sort of hedge fund or something like that, folks. We're outperforming the hedge funds and the smart money. And look at what they're telling their clients. When our worst portfolio was up 101% and the S&P 500 was up 22%, David Einhorn sending out an apology letter to his clients. He returned 1.6% that year. That's the smart money, folks. That's who you want to be listening to. Negative. Just absolutely embarrassing. Bill Ackman. Everybody should know that name. Bill Ackman vows to end 3 years of underperformance, folks. We've seen years of overperformance. So you ain't missing anything being with these clowns. Hedge funds suffer their worst start to a year since 2012, folks. This was back in April. Absolutely embarrassing for the smart money. Our primary live trade briefs last year up 188 grand. That was 125% return on risk. The urgent alert and weekly options service was about 121, and then about a buck even for our accelerated retirement. That was a 101% return on risk. That's our conservative portfolio, folks, where we train people to take a look at conservative trades, triple-digit returns. Now, proven track record, folks. And look at this. Our primary. This is year to date. This is year to date, up about $44,000 if you allow me to round up. 43,702. That's about a 57% return on yes. That's year to date, folks. So we have an absolute proven track record. But before you think everything is sunshine and lollipops, let me stop you right there. You ready for this? We lose some battles, man. The objective, obviously, is to win the war in the long run. But obviously, losing trades happen, man. Listen to me. If you ever go to one of these briefs and the lady or the dude sitting there about how great they are and winning trades left and right, and they don't tell you about their losing trades, run. A fool and their money are soon parted. We have losing trades, ladies and gentlemen. I did not think highly of this guy, but he said this about combat, and I'm going to apply it to trading because trading is a form of combat. Donald Rumsfeld said, in combat, and as in trading, there are known knowns. Right? There are things we know that we know. Then there are known unknowns, meaning there are things we know that we don't know, right? For example, earnings. We know earnings are coming up, but we don't know how the stock is going to react. And then finally, Donald Rumsfeld said, there are unknown unknowns. There are things we don't know that we don't know. Let me give you a perfect example. I remember years ago, we had I put on I think it was a Monday in our weekly options brief, put on a nice range-bound trade on Google, and I went to the gym, jumped on the treadmill, and started watching what I affectionately call CNBC, which is Comedy Central. And breaking news, Google has changed its name to Alphabet, and the stock's up 5% after hours or something like that. Blew out the top of my iron condor. I laughed. What are you talking about, Wiz? You took a max loss on that trade. Why are you laughing? Because that doesn't happen that often. That was an unknown. If I had known Google was changing its name and traded on that information, I should be in jail. That's insider trading. So things like that happen. But folks, if you do the most planning that you can do, you contingency plan, you ask what if, what could go wrong in this trade, and you do all the planning that's possible, and one of these things happens, you got to chalk that up, man, and move on to the next hole. Right? If I get over the target area and there was a missile shot at me that wasn't on satellite, wasn't on human intelligence, that thing was a mobile launcher and it's out to get me, you got to deal with it at that moment. But folks, losing trades happen, and you learn more from your losing trades, folks, than you do your winning trades. We're going to talk about that. Great case study here with one of our members, Joel Rodriguez from Flagstaff, Arizona. He turned a $10,000 account into a $20,000 account trading options. 3 months, folks. Appreciate that, Joel. Thanks for the kind words. So you don't need a large account, folks. I mean, look at this. $10,000 invested 10 years ago. Look at this. $3.8 million, nearly $4 million. That's an 81% return, annualized return rate. Absolutely huge, man. But you don't need a lot of money. You can start, obviously you should start paper trading, right? You should open a paper trading account, take some monopoly money. It's just like me going to the simulator building. I didn't read a book on aerodynamics and run out to the F-18. I would have been dead in 30 seconds, right? You go to the simulator building, but most brokerage firms allow you to open an account with $1,000 and maybe use or need $2,000 to trade on margin. But you can start with as little as $5,000. But what would you do with nearly $4 million? Well, let me tell you what one of my good buddies did. His birth name obviously isn't Shrek. That was his call sign. So I went through Top Gun the same time as Shrek went through. He's a Marine F-18 pilot, great American. He's the commanding officer now. He's a colonel in charge of the Marine Test Squadron. But, Shrek, when I met Shrek, he didn't know how to spell the word options, right? Like most Marines. I kid, little inter-service rivalry. Don't roll in on me. My son is up at Norwich University and is wanting to be a Marine officer. But look at Shrek. Have a great weekend, brother. I'm going to put down my payment on my Cessna 210. That's a Cessna 210 right there. That was my goal for the year, up $20,000 in 3 months. That's what Shrek would do, man, with his money. So what do you need to trade successfully, folks? Well, you need solid training that takes a building block approach. When I went to flight school up in Pensacola, there were guys that literally never even seen an airplane before. And 6 months in a short amount of time, the Navy building block approach made them steely-eyed fighter pilots flying off the pointy end of an aircraft carrier. You need a tight plan. You're going to learn our proprietary trade planning process and risk management methodology, right? A tight plan. We're going to know when we're getting in and out of a trade for max profit or minimum loss before we even get airborne. So you need a tight plan. And finally, guess what you need? A practical application. You need actionable trade ideas, right? You need to be trained, you need a plan, and you need a practical application. Now, I'm not being presumptuous by saying what do you need to get airborne and trade successfully. Why? Because I've been you, right? There's me as a young lieutenant in Naval Air Station Lemoore in my 20s. But when I did all of this training, I had these and then what moments, right? Okay, great. Now I know what a call and a put is. What do I do with it, right? If you're going to teach me how to fish, what lure, what bait do I use, how do I cast, where do I go, what time of day, all that's to tell me, right? So I rose from being a self-taught retail options trader to essentially helping run a multi-billion-dollar Wall Street firm, and then was the CEO and founder of a financial media company based solely on options. So here's what you're going to get. We call this our full throttle max package. You're going to get access because this is simple. I've simplified everything, folks. You're going to get access to all of our live trading Monday through Thursday. On Monday, we do our weekly options brief at 1 o'clock. It's a 30-minute tactical session where we might be in that trade for, that day, or might get out of it by Friday. Weekly options, very tactical. Tuesday at 1 o'clock, we do our primary live trade brief. Front month trades and also trading a couple years out into the future. AR, accelerated retirement, every Wednesday at 1 o'clock, more conservative and hedge trades. And then we wrap up the week on Thursday with Analyze Your Trade and Debrief. What's missing? Well, Friday. What do? I do one-on-one coaching on Fridays. I get together with folks. We come up with a trade plan for a year, and we hit that mission objective, man. So I love my Fridays. It's one-on-one coaching. Very, very busy day for me. But some of you might be looking at that screen, and it says, hey, man, I work during those times. Well, don't worry about during our last customer survey, about 85% of our members work and they can't attend the live trade brief. So guess what you're going to get? During the brief, when we look at new trades and identify what we want to add to the model portfolio, we immediately send out a text alert. Here's a recent one right here. Went out right before my weekly options brief. I actually sent this one before the brief and reviewed it live in the brief, okay? Top Gun Options, weekly options. New CSX bull put spread, 150 contracts, April 26 expiry. Sell those puts, buy those puts for this credit. And I give a range. Hey, I'm going to try and get filled at 13 cents plus or minus a penny and maybe eject at 26 cents. If this trade starts going against me at about 26 cents, I might pull the ejection handle and avoid that max loss. So not only do you get that text alert, but guess what pops up in your Gmail? You're going to get email alerts. And obviously, folks, we post the replays. Within about 30 minutes after the brief, I post the replay. Folks who work sometimes watch the replays during lunch, when the kids go to bed, or just sitting on the couch on Sunday or hanging out on the beach, they watch the replays. But here's an email. So at the top of the email, it goes out the same time as the text alert. I paste the text alert at the top of the email, but check this out. You get a screenshot of the trade. We're selling this leg, we're buying this leg, here's the mid-market price, here's our max risk, here's our max potential loss. So you get a text alert, you get an email alert, and you get access to the recording whenever you can watch it. So there's your practical application. You get the live trade briefs, but you also, what did I say? In order to trade successfully, you need to be trained. Now those live trade briefs all equal about $19.97, right? Almost $2,000. You're going to get access to our 8 full throttle training sessions. We start with the basics, folks: aerodynamics, meteorology, navigation, all the basics. What's a call? What's a put? And the basic tactics, and then we move into intermediate and advanced tactics. What's this sound like? A building block approach. Just like at Naval Air Station, Pensacola, Florida, I went from a young nugget all the way up to a jet aviator. I've taken the Navy methodology that can do that. Just like Shrek, don't even know how to spell what an option was, and an 8. These are about an hour, hour and a half training sessions. No stone is left unturned. You do not leave one of these training sessions with a clue bird on your helmet flapping its wing or a question mark on your shoulder. I'm going to stay there and answer your questions. These alone are valued at $897. So the live trade briefs are $1997. These are $897. We're also going to add your manuals. Obviously, you need those aerodynamic and weather manuals and navigation, primary, intermediate, and advanced. And the workbooks alone are about $197. So let's go through it. Here's what you get. Access to all 4 Monday through Thursday skill-based live trading sessions. If you're not there, you're going to get, well, even if you are there, you get the text and email alerts whenever we open a trade. You get those 8 full throttle training sessions and your 3 skill-based manuals. Folks, you guys know I'm a political science major and a knuckle-dragging Navy fighter pilot. If you do the rough math, that's over $3,000 for max afterburner. If you go to our website right now, it's about $29.95. That's what we sell this for on the website. It is $29.95. But you ready for this? The main reason you are in this brief right now is because one of my strategic partners contacted me and said, hey, Wiz, you know what? I'm going to let some of your or some of his folks or her folks know about this brief. And since they are hooking me up, I'm going to hook them up as well, or more importantly, hook you up as well. Instead of $29.95, we're going to do full throttle max only on this webinar, folks, for $497 a quarter. $497 a quarter, folks. All you need to do is head to go.topgunoptions.com. This is real easy. You ready? /yes. Go.topgunoptions.com/yes. And you can get airborne today. I have to tell you, folks, this 45% discount is only from this brief and only with that link. If you don't decide to get airborne today, guess what happens? If you decide to do full throttle max down the road, unfortunately, you're going to pay what everybody else pays, the $29.95. Okay, so it is only with that link, go.topgunoptions.com/yes. If you get airborne today, here's what I'm going to add that the other folks don't get for that $29.95. I'm going to give you 2 bonuses that are worth $147. Now we're close to $3,500 in value for $497 a quarter. The Top Gun Options OPCL, the Options Pocket Checklist, and our 7-step proprietary trade plan. This is like 12 pages, folks, of how to create a trade plan. This is frustrating. Most of the folks who aren't TGO members that I bump into go, Wiz, I'm always told that I need a trade plan, and when I ask for one from somebody, they kind of shake their head and, yeah, okay, great, and walk away. Not me, man. This is actually a combat plan that I adapted to Wall Street. Trading is a form of combat, folks. You're going to get access today only to these 2 bonuses if you get airborne, okay? Full throttle max is $29.95 a year or $497 a quarter here, 45% discount only. You need to head to go.topgunoptions.com/yes. Folks, trading in combat, they might seem very complex, right? There's a lot of moving parts, challenging, rapidly changing, hostile. How do you battle complexity? Folks, you battle complexity with simplicity. That's what we've done. The Top Gun Options difference is what? It's superior training. I'm going to teach you risk management. You're going to learn discipline and the practical application, all of those methodologies in one easy-to-follow system. So right now, folks, you have 2 choices. You can do nothing. Hopefully you got a lot about the trades we talked about. You learned what a tredge is, a burner trade is. You learned about trade plans and getting those established. Find, manage, target, fundamentals, volatility, technical analysis. So you got a lot out of today. That's great. But now you need to get airborne, man. You're either going to do nothing or you're going to get airborne now and take your trading supersonic. As I said, you have to act now because that 45% discount applies only to this brief and only with this link. After today, you're going to be up at the $29.95 rate, okay? I'm trying to hook a brother and a sister up, so you got to act today. go.topgunoptions.com/yes. And I appreciate your indulgence here, folks. I wanted to take questions at the end because sometimes the questions interrupt the flow, so I apologize. Didn't blow off your questions. I'm actually going to answer them right now, so get them into the chat box. Don't want to keep you too much longer, but let me scroll through here and take a look here. Stephen, no, you don't need a lot of capital. Like you saw with Joel. Joel started with 10 grand and he doubled it in 3 months. Arnie, was it Arnie? Yeah, he started with a small portfolio and he's up 75%. One of our members that I showed you a little while ago started with 6 grand in 2011. He's up to $170 at 5, $175,000. So you can start with as little as a couple $1,000s, right? You don't need to have some massive, huge portfolio. Okay, Kathy, you're welcome. Thank you for your kind words. Absolutely, it was an honor to serve my country. I raised my son. My oldest son Matthew wants to be in the Marines. My middle son Jack, God love him, wants to be in the Navy. So trying to pay it forward. But thank you, Kathy, for your kind words. It's awesome. Rebecca, yes, I do one-on-one coaching. I do that on Fridays. That's why we usually don't have a live trading session on Fridays. I have a lot of live trading sessions on Friday. For the coaching, we get online on a go-to-training webinar, just you and me. The first couple sessions are mapping out your 1-year trade plan, looking at the threats, the resources, how we're going to achieve it. And then after that, we meet weekly in one of those sessions. You get access to my phone, my email, and I'm always on call for you. So, yeah, we can talk down the road if you're interested in one-on-one coaching. Man, I'm going to butcher that name. So I'm not even going to try it. Yes, this discount is only for this brief. Unfortunately, like I said, I do these one-offs every once in a while because one of my buddies says, hey, Wiz, I think some of my folks who aren't interested in what I have to offer might be interested in what you have to offer, but do me a favor and hook them up. So that's why you need to head to go.topgunoptions.com/yes to grab that. Susan, good question, man. What are the biggest risks to the markets? To be honest with you, in the risk of just something absolutely horrific happening, we're going to melt up here. The Fed is dead. It's a complete dove and flew away. The president's been pounding the Fed chief lately to not only cut interest rates, first of all, to stop raising, but to cut them. He also said that they should start QE again. Remember that term, quantitative easing? So I think the risk to the markets, to be honest with you, is geopolitical, military. Iran. The president got on board, ripped up the Iran nuke deal, and what happened? He gave exemptions to 8 quote-unquote friends, China, India. Last time I checked, China ain't a friend. But China, India, South Korea, Japan, he gave waivers to these folks that they could keep getting oil. And then, back in April? He said, no, we're done. Nobody's getting any more oil. So the Iranians have said, hey, we're going to close. If you interfere with us, we're going to close the Strait of Hormuz. I've sailed through there 4 times on the Abraham Lincoln and the Kitty Hawk. Our government has called that an act of war. If you try and string a bunch of mines across there and close that waterway, it will be an act of war. So Iran is on the radar, folks. North Korea, the president correctly got up and walked out from Vietnam. They had 3 days left. He's like, nah, this isn't going anywhere. So North Korea is used to lighting off some bottle rockets and the U.S. running over and giving them cash. This president hasn't done that. So I think North Korea is going to rear its ugly head. So other than that, folks, it's the economy is good. GDP solid. Earnings are good. Unemployment's at record lows. Wages they were stagnating a little bit. They're starting to grow. To be honest with you, Susan, the housing market could be a canary in the coal mine, and it's showing maybe a little bit of weakness. So that one, I got one raised eyebrow looking at housing. So very good question. But we're going to talk about this in every live trade brief. I talk about what's going on that day, strategically, operationally, and then before we trade tactically. Okay? Absolutely. Stefan. New to options, yeah, we take a building block approach to this, folks, a building block approach. Like I said, when I went to Pensacola, I actually had my private pilot's license when I went to Navy flight school. Didn't matter. I started where everybody did. There was a guy in my flight school class who had about 6,000 hours. He traded corporate, or he flew corporate aircraft, and had 6,000 hours. That dude started right where I did, and the guy who'd never seen an airplane before did. I think the guy, where'd he go? He was like from the University of Montana. and I think he drove his car to flight school. So didn't even fly down to Pensacola for his Navy training. And first time he had been in an airplane was a Navy trainer turboprop. So folks, we take a building block approach. If you're new to options, this is perfect for you. If you're kind of know what you're doing with options, it's perfect for you. If you're a Jedi master, this is perfect for you. Okay, we have everything for everybody. Okay, it's kind of a buffet, and we're going to teach you from step 1 to step 10. And we're going to get you trading on those advanced tactics. All right, guys, I'm kind of going over in my time. There's still some good questions, but I don't want to keep you here forever. I can tell that most of the questions means that you're actively very excited about this offer, which is great. So head to go.topgunoptions.com/yes and get airborne today. You're going to get those 2 extra bonuses, but if you do not join today with this link, you go back up to the regular $29.95 rate, okay? And I've done this a couple times, and people are like, oh man, I should have bought at that time. I'm like, yeah. You're with me, folks. You're going to get direct. I prefer. I prefer, honesty over artificial harmony. I'm always going to hit you right between the eyes. I expect you to do the same to me. If I'm wrong or you see something, we ain't about blowing smoke in naval aviation. Being a fighter pilot is a self-cleaning oven. So one of the reasons I'm here today is because I take criticism and I'm direct with everybody else. So excuse me if I was direct today, but we're not messing around. Trading is a form of combat, ladies and gentlemen. Okay, trading is a form of combat. There's going to be a winner and there's going to be a loser. And you get airborne today, we're going to put you on the winning side, okay? So have a great rest of your day, night, morning, wherever you are. Happy hunting. Make sure you hedge, and God bless. Welcome aboard Top Gun Options Full Throttle Max.